Hi fellow traders. Uh, Now I'm going to analyze USD CAD. You have seen in my previous analyses that I had actually recently bought Canadian dollar against US dollar. It means I had sold USD CAD and I was expecting a retracement. Market had fallen down. Then I had bought Canadian dollar versus Japanese yen. I was again expecting that Canadian dollar will strengthen even more, and I had made profit successfully in CAD JPY. I still have the same bias that Canadian dollar will still strengthen even more. So despite making profits 2 times by buying Canadian dollar, I'm still going to buy Canadian dollar, and right now at this price 1.3290 I have bought Canadian dollar. It means I have taken a sell position in USD CAD. Reason behind trading Canadian dollar this time against USD is the weakness in USD against all currencies like Japanese yen, Swiss franc and euro. If you have seen my recent analysis of euro USD, USD CHF and USD JPY, I was expecting an upward retracement in euro USD from 1.0980, and it happened. Market fell down there and bounced from 1.0980 like anything, with very fast move. USD CHF and USD JPY are also gradually retracing to the downside, which means USD will be slightly suppressed, and it will be good to sell USD against CAD rather than buying Canadian dollar versus Swiss franc or Japanese yen, because Swiss franc and Japanese yen are strengthening. So what am I going to target? The very reason behind the entire the sell setup initially was completion of a very important target on USD CAD. So if you look back my second last analysis of USD CAD, you will find that I was talking about the target to the upside in USD CAD, and that target was this completion of 3 drive. So first of all, let me remove this Fibonacci and I will show you how precisely 3 drive was completed, and then selling started. I had sold in last analysis. I had sold USD CAD. Before last analysis, I was bullish. So but the minimum target of 3 drive has still not been completed. So let me explain you 3 drive first. 3 drive was mathematically very accurate, because if you look at the second, this is the 3 drive from here to here. This was the first, this was the second, and in my second last analysis I had explained this, and this was the third, and this was mathematically perfect. And then in terms of harmony, first and last drive was very similar. So if we calculate mathematically, every drive was 161.8% extension of its previous retracement, like this. If you see the 161.8, here it goes, the 161.8 retracement. So the second drive was 161.8% retracement of previous percent extension of previous retracement. And if you look at this one, the final drive is also exactly 161.8% extension of its previous retracement, which makes it a perfect 3 drive. As per 3 drive reversal pattern, the minimum target of the 3 drive is at least a 30% reversal against the whole move up. So the target here is 1.32410. If you are setting the take profit in your position, just set 1.3241 plus add your spreads. So that's all about this video, and the fundamental all about this technical video, and the fundamental reason behind this is in recent speeches of Bank of Canada's Mr. Paulos, Mr. Stephen Paulos, you find that he was not looking for any further rate cut. He said that the economy seems now right. It is right. That was the statement which has been taken as his neutral stand on the matter of rate cut. So that this neutral is the new hawkish for Canadian dollar. A relation between US, Canada, and Mexico in terms of export-import trade deal is very good. They have resolved this. There is no issue like there is issue between US and China. So the things for Canadian dollar is fine in terms of fundamental, and we are not going to go for a very long target. We are targeting very small. So before anything new will be changed in terms of economic events or news, we will already have reached our target. We are going to place the stop loss above this high of today's candle. If we calculate the pips, let me calculate where we can, because from 3290 our take profit is giving something around 46. If we will subtract the spreads from this, it will be something around 44 pips, and the top of this high is almost 40 pips. So we can place our stop loss above this high, above the high of this candle here, around here. So or better suggest, instead of placing a stop loss, look for the candle closer above this high, because USD CAD has a tendency of going sideways or making a long tails to the downside, to the upside, but when it retraces down, it comes down, like you see its behavior here. Many long tails to the upside and very gradual retracement to the downside. So rather than placing the stop loss that can be taken out because of any tail, any sudden spike, I suggest you to wait for the daily candle closer above this. If daily candle will close above this point, then take the loss and exit the position, or else hold on to the position until your take profit is hit. So that's all about USD CAD. Happy weekend, and let's see you in December. Thank you for watching.